You know, usually when people talk about the AI boom, they mean chips, data centers, cooling systems. But apparently, the biggest winner might just be beds. You're listening to Earnings Unscripted. We are unpacking Hilton Worldwide, ticker HLT Q4 2025. It is February 11th, 2026. So, Mero, honestly, this felt like a weird one. Record pipeline, but then softer demand from the actual U.S. government? How does that even balance out?
Yeah, it's physics. High friction, high velocity. Look, the headline numbers are decent considering the season. Revenue hit $3.09 billion. That's down about 1% from the third quarter, which is roughly expected for winter. Adjusted EBITDA came in at $946 million, down 3% sequentially, sure, but wait, here's the thing. It actually beat the high end of their own guidance.
So they managed the descent well.
Exactly. Just a quick reminder before we keep going that nothing here is financial advice, just us thinking out loud about the numbers. But the market, it didn't quite know what to do with it. The stock pulled a classic pop and fade today. It spiked hard right at the open, above 330, then just drifted lower all day, closed up barely 1%.
Which makes sense, right? Because on one hand, you've got this insane narrative. Niceta basically pitching Hilton as an infrastructure play. He literally called the AI complex one of the greatest productivity booms in history, not for coding, but for the construction crews building the data centers. It's like, forget white collar, we want the hard hats.
It's a brilliant pivot. If you can't sell rooms to consultants anymore, sell them to the guys pouring concrete. But look, you can't ignore the drag. U.S. government demand was soft, down, I think it was over 2% on the business transient side. That's the hangover from the shutdown threats.
Right, which feels, I don't know, a little sticky. It's like, we'll take the AI workers because the bureaucrats aren't traveling?
Pretty much. You swap a policy risk for an industrial tailwind. But the cash flow implications of that shift are, well, let's just say they're non-trivial.
Non-trivial. I like that. All right, let's actually dig into that pivot, because if Hilton is really becoming a blue-collar bet, that changes the whole multiple.
It changes the multiple because it changes the customer. You usually think of corporate travel as a consultant with a shiny carry-on in a downtown lobby. But Niceta, the CEO, he's betting the farm on, well, muddy boots.
Muddy boots?
Yeah. Listen to how he phrased it. He didn't say software. He talked about the, quote, AI complex. He called it one of the greatest productivity booms in American history. Which, okay, typical CEO hyperbole, right? But the logic underneath is surprisingly solid.
Right, because you can't run an AI model on air. You need data centers.
You need power plants. You need cooling systems. You need fiber runs. And guess what? The people building that stuff can't do it over Zoom. They have to physically be there. So Hilton isn't betting on the AI output. They're betting on the AI infrastructure build.
So it's a pick and shovel play, or I guess a pillow and sheet play for the guys holding the shovels.
Pillow and sheet play. I'm stealing that. But yes, it's a derivative bet. And frankly, it's clever because it bypasses the question of, will AI work? It just assumes people will spend $1 trillion trying to make it work. And all those engineers need a Hampton Inn for 3 months.
Which brings me to the other weird thing I saw. Speaking of niche markets, did you catch the bit about the Undergraduate brand?
Oh, yeah, that caught me off guard.
I mean, hold on. We're talking about college dorms? Hilton wants to run student housing?
University markets, they call it. But yeah, effectively, they're launching a brand called Undergraduate. It sounds ridiculous until you look at the economics. Student housing is famously recession-resistant. Mom and dad pay the rent regardless of what the S&P 500 does.
Unless the kid drops out.
Fair point, but look at the bigger picture here. They bought that Graduate brand recently, premium hotels near colleges. Now they want the cheaper Undergraduate tier. It's essentially cradle-to-grave loyalty. You get the kid in a Hilton dorm at 18, you get the parents visiting at the Graduate hotel, you hook them into the honor system before they even have a job.
It's terrifyingly smart. It's like, welcome to adulthood. Here's your Hilton points number.
It's cynical brilliance, but from a pure margin perspective, it's genius. These aren't high-service hotels. You don't need daily housekeeping for a sophomore. The operating margins on that could be significantly higher than a standard full-service box.
But wait, does this actually move the needle, or is it just another badge on the website? Because they launched, 3 brands this year?
Ooh. You're right to be skeptical on scale. Right now it's tiny, a rounding error. But it signals that they think they've maxed out standard corporate travel. They're hunting in the cracks now. Student housing, long-stay apartments, construction crews.
Which is sort of a defensive signal, isn't it?
It is. It's an admission that organic growth in the normal hotel business is getting harder to find. So you have to go where the weird demand is.
Weird demand. I feel like that should be the title of this episode.
Maybe next quarter.
Okay, so they're chasing construction crews and college students. Well, the government stays home. It's a strange mix, but if you zoom out, where does this leave them heading into the rest of 26? Are we looking at a breakout or just, treading water efficiently?
Honestly, it looks like a breakout, but a grindy one. Look, the guidance for 2026 is solid. $4 billion in EBITDA. You don't put that number on paper unless you're seeing something structurally positive. They aren't just treading water, they're swimming upstream very efficiently.
Well, Niceta sounded shockingly confident about who is doing the swimming. Did you catch that line about the consumer? He said that we're seeing the, quote, first prints of middle-class real wage growth.
Yeah, that's stopping my tracks.
Right? Because usually CEOs are hedging about macro uncertainty or consumer softness, but he's basically calling the bottom on the middle class squeeze. If he's right, that's not just good for Hilton. That's a massive signal for the whole economy.
If he's right, that's the variable. Because if disposable income actually unlocks, then those 26,000 new rooms they just opened, they fill up fast. Specifically, the Hamptons and the True brands. Those are cash printers when the middle class travels.
But there's always a but with you, isn't there?
Always. The but is China. We can't ignore that RevPAR there was down 1.4%. While the U.S. is hyping up this AI construction boom, China is stalling.
So it's a bifurcated recovery. The West accelerates, the East drags?
Exactly. It feels like Hilton is firing on all cylinders in the U.S. Infrastructure, students, recovering wages, but they're essentially carrying an anchor in Asia. The question for next quarter is really simple. Does the U.S. consumer momentum overpower the international drag?
It feels like a high wire act. They're betting the farm that the American worker is back and ready to book a vacation.
It's a bold bet. But looking at that 500,000 room pipeline, I wouldn't bet against them. They're good at the boring stuff.
Good at the boring stuff. I feel like that's the highest compliment you can give a company.
In this market, absolutely. Excitement is expensive. Boring pays the dividend.
Well said. We'll leave it there. A grindy breakout fueled by blue-collar AI jobs and college kids, assuming the rest of the world doesn't pull them back.
Simple, right?
As always. Simple as quantum mechanics. Exactly. All right, that's a wrap on Hilton. Stick around for a quick word on how we actually put this thing together. If you want these episodes to just land in your feed automatically, go ahead and follow the show. Full transparency here, we use AI to pull the transcripts and heavy data so we can focus on the actual story. If there is a specific ticker you want us to break down next, send a note to earningsunscripted@datamadness.ca. And thanks for listening.
See you then.